Good morning, good afternoon, or good evening, traders. This is John speaking. Today we are going to view Woolworths. Woolworths is a very large company in the top 20 on the Australian stock market. But I wanted to give you an overview where the market is, but also I wanted to teach you the importance of actually reading charts and not using indicators to make your decision for trading. Because most of us, I know when I was first started trading out, you would go into a position because the indicators are pointing up, or you would have the MACD pointing up, your stochastic pointing up, your RSI pointing up, your CCI, you cross over the indicators, your Bollinger Bands are pointing up, all this sort of stuff. We get in based on that, but we'd actually forget the real reason why we actually getting in. So I want to actually teach you today the importance of reading charts. So let's get straight into it. Today we actually have a pretty good upward trend. This line from here coming up through here, and we can see it's up. This trend line is coming up through to here right now, and we have a bit of resistance through here and a bit of support through here as well. So right now, where it is right now, it's at that support level. So if you remember my daily entry that I told you yesterday, how you use a daily intraday trade, well this is the type of setup you can use it for. Okay, remember, use the high trough moving averages and get in on based on that, because we are at a pretty good daily support, and we can get in for a good, get in right up for a 5 or 10% profit on our option. You get out and make a good daily living out of that. So, but let's look at the overall market. The overall market is to the upside. It did come up. It was bouncing off through here, and eventually did break up. But let's open this market right up. Let's have a look at something here. We can see that when the market was pushing up, came through here, actually pushed above this resistance, came back down, found support above this resistance. Now, support and resistance always change roles. Always, or most likely always change roles. We have a resistance here, okay? We can identify that there's resistance. If I just scroll back the chart through here, okay, right now, we're just looking at the chart. Okay, we can identify resistance. So put a line there. That's it, just put a line there. So, okay, that is resistance. Then, when it comes up to it next time, if it breaks through, it's likely to break up, come back down and find what on it? Support. That is so evident in my trading plan. It's not funny. That support resistance, when they change roles, they can definitely use a benefit to your trading. Because if you're going short on this market and it breaks through resistance, you do not want to be short, because most likely it's going to find support like it did here and rise up. I've shown you time and time again, traders, so make sure you keep an eye on that. Support and resistance change roles all the time. So the market's actually had a pretty good run to the upside. But let's look at this. The market came up, the market came down, and it made a lower trough through here. Okay, lower trough, indicating that the sellers are in control and the buyers are now weakening there. Okay, and now that's saying, okay, now the sellers are taking control because of this lower trough. The sellers are taking control. But let's look at this. How do you know when to cancel out when the sellers are not in control? Let's have a look at this. This is an actual flag through here. You can just draw a trend line through here, just up through there as well. Okay, just something through there. Now, we can see that this is a bit of a channel happening through here, and suddenly, bang, look at this big day, pops right out of there. That would indicate that the sellers are not in control anymore, and now the buyers want to continue to take control. Now, this is called a flag. If you don't know what a flag is, it's simply a projection where the market might go. And how you simply do that is you measure from the top of this here, where the market is, and you measure to the down of where the support was, where they actually ran from, through there. And then you measure from the bottom through here. Okay, the bottom of this channel, which is a flag. You see, it actually looks like a flag, doesn't it? Straight up, flag down, and once it breaks out of there, the next projection point is likely to be up here. And exactly, look what happened. It went straight up there and hit resistance. This is a flag. Again, this is learning how to read the market, listening to the market and saying, okay, market, what are you telling me? Instead of trying to use the indicators to make your decision on where the market's going. It's very, very important, traders, so please understand that. So that's a flag. So this day right here was indicating, okay, now that the sellers are not in control, and now we're taken to the upside. Now, let me just remove that. And let's look what's happening in recent times. Okay, the market went up, made a top here. Market came down, made a trough, came up, made a peak. Okay, so we're still peak of right now here. Right now here we are peak. Sorry, trough, peak. The buyers are still in control. Okay, because of this. This is a trough. This is a high trough. High trough. Buyers are still in control. But look at this. Lower trough. Ooh, the sellers are indicating to take some control here. It comes up. It gives a lower peak. Okay, a lower peak. It shows that the lower peak is there now, and that is saying that the sellers are in control. Remember, how do you know that the sellers are definitely taking over? Easy. Look at this. Remember that flag thing we did over here before? We did the exact same thing here. We draw a trend line down through here. Draw a trend line down through here as well. And as soon as this day here, this big day here confirmed the lower peak. Okay, confirmed the sellers in control. But when you say, okay, when are the sellers definitely in control, you need to do this. You need to get a little trend line, and you need to say, okay, this is a bit of support through here, bit of support resistance. So draw a bit of support resistance line through there. And also it had this previous support down here as well. So you can see this clearly came down, closed below it. This is where the sellers actually took control. This is where it confirmed. Not like this bit over here. Remember, it actually did not come down and confirm. It actually shot back up and turned itself into a flag. If you remember that. Remember that flag there. This is actually listening to the chart. Now we are down. We've had a big rundown, and for people that actually watch the Aussie market on a daily basis, we know we had like a 400-point drop in the Aussie market. So every single stock you can think of was down a lot. That is good. That is good. Because look, remember what I said before, that we are now at support. Remember, go back to yesterday's video. Yesterday's video, I told you how to time your way in. If you're looking for a daily trade to get in and get out on the same day, this is the support the foundation need. Get a daily support or a weekly support and time your way in on an intraday. Wait for the higher trough to show the buyers are in control. Okay? Listen to the market. Don't listen to the indicators. The indicators can confirm and use as confirmation, but we must not use the indicators to say, okay, we're getting in on this trade because of what the indicator's doing. Get in on the trade to say based on what the market is telling you, because that's the most important thing you can do to your market. The most successful people on the planet that I study on this on trading the market, and they make a lot of money. We're talking millions and millions of dollars. They look at charts and they learn how to read charts. For one of my mentors, just off the top of my mind, he makes more than $3 million a year. Sorry, it's actually about $6 million a year, and all he looks at is 2 moving averages, volume, and learns how to read charts. That's it. So please learn how to read charts. I'm going to be doing a home study on this soon. I'll be releasing more videos on educating people how to actually read charts. But if there's anything you can do, please, support resistance, peaks and troughs, moving averages is the most important thing you can do to your trading. Please take care. This is John Howe. If you have any questions, please email me at support@tradingandinvestingforyou.com. As always, please, I actually ask you, please, can you please leave feedback below? Send me an email, send me some feedback, as I really do appreciate all the feedback you give me. So, once again, thank you very much for listening, and I'll see you tomorrow. Take care. Make sure you visit tradingandinvestingforyou.com, where there is loads of free information that is giving away right now. There's weekly wraps on the US and the Australian market. There's newsletters every single week with the must-see information. You get a video 6 days a week, every single week, viewing different stocks on the Australian stock market. So make sure you do yourself a favor, go to tradingandinvestingforyou.com and start to receive this free information now. Trade in the stock market is risky and can cause substantial financial loss. We do not claim or guarantee your profit from the information provided. The information in these videos is meant for educational purposes only. That being said, I've been trading the market profitably for many years. So please, do your own homework and make sure you look after your current financial situation.